Hello, all. Good evening. What's up? How are you all doing? So, how was your day today, guys? So, I hope you might have observed my setup would have given you beautiful entry because it was a beautiful trending day. Namaskara, Praveen ji. You're welcome, Jitendra ji. I'm very happy that you might have witnessed things happening right in front of your eyes. Right. So, whenever you have multiple confirmations with good indicators, you will gain confidence. Even if you get such beautiful trades once in a week, then the kind of profits that you can generate at the month end is brilliant. Yes. So, Namaskara, Raviji. So, good evening, Niravji. So, let me just wait for others to join in. Today, we shall discuss option chain, and I'll tell you how to identify support and resistance from option chain. Okay. Then we'll discuss how to identify the perfect in the money strike price that you're supposed to trade. Good evening, Santoshji. Good evening, Purnima ji. So, let me just wait for 1 or 2 minutes for others to join in so that Praveenji, you made 750 rupees profit using my setup. Thank you so much. I'm very happy that you had that conviction, you had that courage to enter trade because you had multiple confirmation. Yes or no? Arish V. Namaskara. Because whenever you have confidence in terms of taking a trade, you should go for it as there are multiple confirmations. Right. So before others join in, let's try to took 4 paper trades based on strategy and book profits. Nitinji, that's awesome. I'm very happy for you. Okay, so let's Purnima ji, because if RSI is supporting your entry, you can just take a trade. Don't worry about reversal. Just book profits and come out of it. Santosh ji, when I teach you about how to train stop loss, you'll get an idea how to stay back and trade for long. Because definitely there will be profit booking and definitely there will be a retracement. But if you can manage that risk, yes, fearless entry is good. But how to train stop loss, I'll tell you. Jose ji, you made 1,000 rupees profit twice. That's awesome. With confidence, you entered Bank Nifty and made profit 2 times 1,000 rupees. That's awesome, sir. That's a brilliant growth. Thank you, sir. Nitinji, see, we are trying to master capturing 10 to 30 points, right? You can increase the lot size rather than increasing the points, right? So if you book 30 points continuously for 100 days, then the kind of experience that you have in the market and the kind of confidence that you get is brilliant. Then gradually increase the lot size than increasing the points. So once I teach you, see, let me teach you the option chain first. Then I'll teach you how to choose the correct in the money strike price that you're supposed to trade. Then after that, I'll give you an idea how to trail your stop loss. Okay, so you can keep trailing your stop loss and you can capture more points. Right at that time, you're not see as of now we are focusing on the target, 30 points target and 10 points target. Yes or no? Good evening, Shanji. As of now, we are focusing on 10 points and 30 points. So once we understand trailing stop loss, we are not setting any target. We are allowing the market to give beautiful movement. We are just managing the risk by trailing the stop loss. So that way you can keep trailing the stop loss and you can make more profits because we are not setting any 30 points target. We are setting 30 point stop loss and slowly we are changing it to the target value. Let us assume 300 points is the premium. Let's assume 300 is the premium of Bank Nifty put option. What should be the target? 330. What should be the stop loss? 270. So as of now, we are focusing on right entry so that we can capture 30 points target. That is called a scalping. So we can think the other way around also. So we can think in the other way around also. Rather than setting 330 as target, I'll teach you how to set 270 as stop loss so that if there's a beautiful movement, if you modify your stop loss from 270 to the next target. See, if 300 rupees is the premium, what should be your target? I want everybody to reply. I want everybody to reply. Yes, 330 should be your target, right? So let us say if 30 points is stop loss, what should be your stop loss? 270, right? So we have got three values here. 300 rupees is your entry price, 330 is your target, and 270 is your stop loss, right? So as of now, we are focusing more on taking right entry, that is entering exactly at 300 and booking profits at 330. This is what we are mastering as of now. Once I teach you stop loss, you will enter trailing stop loss. Once you enter trade at 300, you will not worry about 330, you will worry about 270. You're trying to make peace with your loss first, okay? You'll keep that 270 as your stop loss. When suddenly the premium jumps to 360, what will you do? You'll modify your stop loss, which is 270 to 330. Is that clear? You modified your stop loss, which was 270 to 330. Even if your stop loss is hit, don't you think you're in 30 points profit? Yes. So if you enter a trade with stop loss of 270, suddenly you change it to 330 because premium went to 360. It is way above your stop loss now. And suddenly from 360 it will become 400. Then change it to 30 points extra. So you'll change it to 360. You'll modify your stop loss from 330 to 360. Even if your stop loss is hit because of volatility, don't you think you have booked 60 points profit by trailing your stop loss? And if 400 becomes 500, modify your 360 into 460. So you have booked more than 130 points. So that is how we keep trailing the stop loss and let market to fall further. And whenever premium is going up, we'll slowly inching towards the maximum profit. So these are two ways. Either just enter trade, book 30 points profit. That is very good for a newbie, right? So it's a very good for a newbie. You need to follow that method for 100 days because I want you guys to practice. I want you guys to practice how to take right entry. Karunesh, good that you made 3K using my setup. There is no cover order like what we have in stocks, but you need to keep a stop loss and you can keep modifying it. Yes, yes, Purnimaji. Once I discuss about that, how to trail stop loss, I'll show you where to keep stop loss, how to modify it. You can apply that logic because once you make peace with your loss, you're not worrying what will happen next. And once you modify your stop loss to the first target, that is 30 points, then you're happy that whatever may happen in the market, 30 points is booked for you. Right, and slowly keep modifying for every 30 points jump. If the current premium is jumping 60 points, modify your stop loss to the next 30. That way you can keep inching towards 30 points and build your profits over a period of. This comes with experience. Nobody can teach you all this, but how to trail stop loss, is that okay? There is no cover order, but you have to use stop loss order as your cover order method in index trading. Okay. So let's focus on learning option chain. So before going ahead, I just want you guys to understand the basics. Okay. See, you have two methods of trading index. One is either you can trade futures or you can trade options. Yes or no? But I don't suggest you guys to trade futures because capital required is too much. Okay. And many a times stop loss will be skipped. Say for example, there are two guys who are trading in index. One guy has got very good capital. Say both have same capital. Person A has 2 lakhs in his demat. Person B is also having 2 lakhs, but person A is very aggressive. He wants to trade futures so that he can book profits quickly, so he's trading in futures. And other person, though he has got 2 lakh rupees, he wants to risk only 10% of his capital, that is 20,000 rupees. Okay, both are making same profits, but whose risk is higher, person A or person B? Person A, future guy, right? Because option guy has put only 20,000. Even if things go wrong, suddenly there is a crash, suddenly if market goes up, maximum loss is 20,000, nothing beyond it for option trader, buyer, right? But a future trader, person A, if things go wrong, he can lose more than 20,000 rupees. That is more than 10% of his capital. I'll tell you one real-time example. See, one of my friend was hosting a birthday party, and that fellow was trading happily in DHFL. Many people might not know about that stock. That stock crashed heavily from 480 rupees to 120 rupees in just 3 hours because there was an insider trading. Okay, and that guy had invited all of us to meet him for a birthday lunch party. So we all had been to his house. At that time, I was a novice, so I was trying to learn more about the markets. So he was trading in futures and he was in a profit of 1.5 lakhs and he had a capital of 20 lakhs. Okay. So as a layman, I just suggested him, nobody will give you 1 lakh, 1.5 lakh on a single day. Market has given you this as a profit, as a gift for your birthday. It's better to book profit so that you'll be at peace whenever we're having a good time having lunch outside. He said, no, I have kept a proper stop loss and I've already trailed my stop loss. Even if my stop loss is hit, I'll be in a profit of 30,000 rupees. Okay. Then we all said it's good. Anyways, if stop loss is getting hit, he's in a profit of 30,000. Anyways, let him take risk. It's his birthday. We never know. It can be a jackpot for him. That's what we discussed. And he had invested like around out of 20 lakhs, he had invested around 12 lakhs in that single trade, stock option, call option. Okay. So we had been out for a lunch and suddenly by the time we came, he was in a loss of 19 lakhs. His capital is 20 lakhs. Okay. He had kept a stop loss. Even if his stop loss is hit, he must be in a profit of 30K profit. But when we reached his house, he was in a loss of 19 lakhs. Why? Because his stop loss order in futures was not triggered. And DHFL stock fell from 480 to 120 rupees because of the insider trading. That was the worst day of his life. And that was when we all got scared about future. That's when I felt if you're trading in futures, you have no future. But if you're trading in options, you have a lot of options. Either you can do hedging, and the maximum loss in any call option or put option is the amount that you've invested in that contract. Yes, sir. Say, for example, if 300 rupees is the premium of call option, 300 into 25, 7,500. Even if things go wrong, things will not go wrong. Anyways, you'll exit with a stop loss. But if things go wrong, the maximum loss is 7,500. It will not erode beyond that. Yes, sir. I want everybody to reply because this will give you very good insight. These are the lessons that are learned from real-time trading, right? You won't get these kind of lessons in any book. So, yes. So, where do you have limited or less risk? Is it futures or options? So always take less risk. Okay, from now on, master how to make consistent profits using less money. Once you gain confidence and once you have enough money, even if you lose that money, it should not pinch you. Then you can trade futures. But I personally suggest stick to options. It's a request. Okay, because if you're not able to make consistent profits with smaller money, don't you think you will lose heavily if you go for higher profit? Purnimaji, stock option as a compulsory settlement. If your decision is wrong, if that particular stock is bullish, and if you take put option, month end you have to pay compulsory settlement in stock option. I'm not talking about stock option. I'm talking only in terms of index option. Because one of my friend paid a compulsory settlement of 1.5 crore because that stock was bullish and he was foolish. He took put option and he paid 1.5 crores as the compulsory settlement on the last week of expiry. So that's why I don't trade stock options. I trade only index. I do swing investment in stocks. I've kept my life very simple. And I would recommend you the same thing. Is that fine? Never take overnight positions because anything can happen overnight. Yes or no? Suddenly market can be, there can be a gap up or there can be a gap down. And most of the time, whenever I took a positional trade, market went in the other way around only. It never opened in huge profits. Right. So please do intraday trading, make as much as profits in intraday. Sleep peacefully. Do swing investment. If things go wrong, at least it will remain as your long-term investment. At least you'll not lose money. Master the art of intraday trading and master the art of swing investment. These two are wealth creating methods. Any PTSD, buy today, sell tomorrow, sell today, buy tomorrow, all these things are like putting you at higher risk. Never be at the mercy of the market. If you take a positional trade, you are at the mercy of the market. Okay, so see, what are the advantages of trading futures? What are the advantages of trading futures? I'll tell you that. The movement is very quick. Say, for example, if the index is moving 100 points, you will get equivalent movement in the same time. You will get 100 points movement in futures also, right? It is very quick. It will give you very good thrill to trade in futures. Okay. Capital required is too much. In currency segment, I would recommend you to trade in future because capital required is only 2,000 rupees. Right. When capital required is so less, then you can just take risk and trade. But in Nifty and Bank Nifty, you need to shell out closely around 1.5 lakhs to trade futures. It's not worth. Okay. So the movement is very quick. It is 1:1. For every 100 points movement in index, there is a respective 100 points movement in futures. And it's very costly also. Capital कम हो परवाह नहीं मगर talent कम नहीं होनी चाहिए. Right. Talent कम नहीं होनी चाहिए. So try to use only 20,000 rupees, like many of you guys who have used it today to make 750 to 1,000 rupees, and try to make regular profits of 750 or 1,000 rupees for 100 days. Don't you think by using just 20,000 rupees, if you make 1,000 rupees continuously for 100 days, you're making 2 lakhs profit? Yes or no? Yeah. So once you make two, so what do you have at the end of 100 days of qualitative trading? You have 2 lakhs profit along with 100 days of trading experience, which is unmatched, which is priceless. You can never get experience for a particular price. Experience has to be experienced. So with that 100 days of trading experience, with 2 lakhs profit, you can start trading with either 10 lots or 36 lots. It is left to your courage, right? Then that's when actually you'll see huge profits. But as of now, for next 100 days, master the art of taking a right entry, because stock market trading is a game of probability. If you take a right entry, the probability of hitting the target is very high. Yes or no? If you take a wrong entry, the probability of hitting your stop loss is very high. So please focus on how to take a right entry. And the risk is very high. As I've narrated my friend's story, in 3 hours, he lost 18 lakhs. So, and the operation or the usage of futures is very easy. If market is bullish, you buy futures. If market is bearish, you sell futures. Execution is easy because you're paying so much of money. Then if you find the difficulty in execution, then there's no point investing so much of money. So movement is too quick. That's an advantage. And execution is easy because you buy in bullish market like a stock and you sell, in bearish market like a stock. But it is too costly. Just because it is too costly, it is very risky because you might lose all the money. That's why if you're trading in futures, you have no future. And if you're trading in options, you have a lot of options. Okay. So let's discuss on options. But what is the disadvantage in trading? Uh, Anjanji, in options, there is a trigger price and a stop loss. Okay. So even if there is a stop, even in options, your stop loss can be skipped. But what is the risk? Where do you have the maximum risk? Let's assume we are trading both future and options. Okay. Let us assume both the stop losses are skipped. Who has more risk? Anjanji, the guy who's trading future or who's trading options. Stop loss can be skipped anywhere, right? So why do you want to take so much risk at the initial stage? Is what I'm trying to tell you. Once you master the setup, you're free to trade either future or options because the risk is yours, right? In February month, I have made 24 lakhs profit in option trading, which could not be replicated by a future trade. So by risking 5 lakh rupees, I made 24 lakhs profit in February month. There are people who are trading with 10 lots of futures, that is 13 lakhs. Using 13 lakhs, they could not even make 1 lakh. Okay, so for me, using lesser capital, if I make more profits, that gives me some kind of a sadistic pleasure so that I can withdraw annual income as my monthly income. So I'm trying to tell you my story. If you are happy with it, you can just trade futures options, and if you want to trade futures, then you're free to do that also. But stick to the setup, and you should be in front of the system. You cannot set stop loss and go. Even if stop loss is skipped, at least you can exit immediately, right? So many a times we just try to set stop loss and go away. That's not advisable, like what my friend did. So stop loss can be skipped on both the sides. But whenever I traded options since past 7 years, not even one time my stop loss is skipped. I personally have experienced trading futures and skipping stop loss. But in options, in 7 years of my trading experience, I've never witnessed a situation where stop loss is skipped. Is that clear, Anjan? I'm trying to give you the entire array of options. It is all dependent on individual risk appetite to choose which is better. Lesser the risk, it's better. It will boost your confidence. And capital required is yes, and it's affordable. Yes, Priyanka, you're right. So option trading is affordable. So the minimum capital that you require to trade either Nifty or Bank Nifty is maximum 20K capital. Within 20K, you can get one lot, and you just have to book 30 points and 10 points regularly for 100 days, so that you'll master the art of taking right hand. And the maximum loss in option trading is premium. Yes or no? Whatever money that we put uh, in trading, that is the maximum loss. Nothing beyond that. Okay. And in bullish market, we have to buy call option. Call option and put option are the two instruments that are provided for option traders. In bullish market, you have to buy call option. In bearish market, you have to buy put option. Yes or no? Say for example, in bullish market, if you buy put option, you're taking a wrong trade, wrong instrument in a different scenario. Yes or no? What happens if I buy put option in bullish market? Or let's imagine today market was falling so beautifully. If I take call option thinking it will reverse, don't you think I would have lost heavily? Yes. There are two things. There are two important things in the market. Either you can predict market or you can follow market. Which one is easier? Correct, right? My setup will help you to follow the footsteps of the market. Nobody can predict what will happen next, right? So just following the footsteps of the market is what is needed, and that's what we are doing. Okay. So are you guys clear? In bullish market, we buy call option. When bearish market, we buy put option. Clear, right? So there is one more way. Why do we have to uh, stay away from buying put option in bullish market? Because it's a wrong contract. What happens to the wrong contract? The premium of put option will come down. In a bullish market, if you buy call option, premium will go up and you'll get the targets achieved, you'll make money. But if you buy put option, the premiums will come down and you'll make loss. Yes or no? So that is the issue, right? So how can you make money in bullish market? There are two ways. Either you can buy call option. This is a standard method, or you can sell put option, right? Because premium is falling. If a stock is falling, what will you do? You'll sell that stock. If the premium is falling, how will you make money? You'll sell put option. Yes or no? If you buy put option, you'll make loss. But if you sell put option, you'll make profits. Yes or no? Are you guys clear with this point? So these are the two ways in which you can make money. Either you can buy call option or you can sell put option. As and when you sell put option, the premium is falling and you're making money. Right. So as you guys are clear with these 2 points, can I also say by doing reverse engineering, if you get to know in option chain, too many people are selling put option, don't you think you are getting a hint that market is about to become bullish? There are two ways of making money. Either you can buy call option or you can sell put option. So we can do reverse engineering. If you see too many people are selling put option, obviously the outcome should be bullish market, right? So how does they create bullish sentiment by selling put option? By creating strong support. Whenever they sell too much of put option at a particular strike price, that strike price will act as a strong support that will not allow market to go further down. Rather, they'll push it up by shifting that support gradually upward. That's how market is pushed upward. Is that clear? Yeah. So selling put option, technical term, it is also called as put writing. So put writing will lead to creation of strong support. Creation of a strong support will make market bullish. Yes, Jasprit ji, I'll just repeat it once again for you. See, it's a bullish market. How can we make money in bullish market? You can buy call option, right? Yes or no, Jasprit ji? You can buy call option. But if I buy put option, what happens? I'll make loss because it's a long contract. I cannot buy that because premium is falling. Premium is falling. But how to make money? Is there any other way that I can make money in put option? Rather than buying put option, if you sell put option, you will make money because premium is falling. Once you sell, how much ever a premium is falling, that's your profit. If you buy call option, how much ever premium is going up, you'll make so much of profit. Both are one and the same. You can buy call option to make money, or you can sell put option in a bullish market. Is this point clear, Jasprit ji? Okay. So see, I can say if too many people are selling put option, can I not say that market will become bullish? In bullish market, people sell put option. If you sell put option, market will become bullish. It's all one and the same, right? So you'll get to know about this information in option chain. So selling put option, technically it's called as put writing. If too many people are doing put writing, okay, they're trying to push market up. How are they trying to push market up? By creating a strong support. Strong support is created, which in turn makes market bullish. Put writing will lead to creation of a strong support. Strong support will push market up. That's how it's a circle, right? Bullish market, they sell put option. Once they sell put option, it will create strong support. Once again, it will push market up. It's a vicious circle. Is this clear, Jasprit ji, now? In bearish market, basic, you can buy put option, right? But you can make money in call option also by not buying it, but selling. Selling call option will give you profits in bearish market. Yes or no? Are you guys clear with this? In bearish market, you can buy put option to make money, or you can sell call option to make money. Okay. Selling call option is called as call writing. Selling call option is called as call writing. And what happens if you see too many people are selling call option for a particular strike price? That strike price will act as a strong resistance. So what happens once strong resistance is created? when strong resistance is created, they're trying to hold the market at that level and they're trying to push market downward. They can push market downward by shifting the resistance from higher strike price to lower strike price. Are you guys able to visualize whatever I'm trying to tell you? So whenever they're trying to shift the resistance from higher strike price to lower strike price, they're forcefully pushing the market down. That's how call writing will make market bearish. Okay, so is this clear? I'll just give you a quick recap. So when it comes to future and options, easy execution, higher capital for futures, but risk is also higher. I don't want to put entire 2 lakhs in the market and wait for profit. It's very risky. Rather, I'll trade options because it is lesser risk, more peace of mind to trade. Okay, so and basics of option buying and selling we have discussed, right? So too much put option selling indicates bullish market because support is created. Too much of call option selling indicates bearish market, right? So is this clear? So let's go to option chain. Nifty, let's take Nifty 50. Let's try to understand the raw data. After that, I'll give you an alternative, which is very easy to look at and visually very good to identify support and resistance. Okay, so the market, what is the value? Nifty is closed at 17,154 here. Okay, don't you think 17,154 is between these two strike prices, 17,150 and 200? You can see the brown area, these two brown areas on the either side. It is meeting at these two strike prices, which is trying to indicate that market is closed somewhere between these two strike prices. Okay, and don't you think there is a 50 points gap between all the strike prices here? 200, 150, 150, 1000. And if you go the other way also, 250, 300 and 350. So there is always a gap of 50 points between every strike price, right? And do you see here in this table, this table has been divided into two halves, okay, by a column called a strike price. Strike price is the column which is dividing the table into two halves. The left half, do you see calls here, calls table, and right side, do you see puts? Yes, right. So the strike price column is dividing the table into left half of the table is for calls and right half of the table is puts. So what is more important here? Do you see the last column on the either side? It says OI, open interest. The last column on either side, it shows open interest. That means how many people are still keeping their contracts open for a particular strike price. Okay, open interest indicates how many contracts are open for that particular strike price in simple words. Okay, you need to see this shaded yellow shaded area is not that much of important because it's already in the money, the areas which are already been covered. But do you see the white part here on the call side? Do you see the white part here on the put side? Yes or no? So you need to see the top five and identify, yes, OTMs. The sorry. So which strike price has the highest open interest here? If I take the six values here, 1, 2, 3, 4, 5, 6. If I take the six values, which is the immediate highest? So see, market is closed between 17,150 and 200. If tomorrow market breaks the resistance of 17,200, which level can act as immediate resistance for it? Don't you think we have 1,29,000 contracts are still open for 17,300? Rabiji, which is the immediate resistance? You're saying 1,66,000 is at 17,400. But can you come to 17,400 without breaking 17,300? Don't you think this will act as a first entrance 17,300? After breaking 17,300, will come to 17,400. So that's why I'm asking which is the immediate resistance for tomorrow. Market is stuck at 17,154, which you can see here. So it has to break 200, 250, and then it might face resistance at 17,300 because highest contracts are still open here. So this is called as, this is the calls table. Highest writing is here. If you have too much of call writing, what will be the sentiment at this particular strike price? Don't you think 17,300 can act as a resistance for tomorrow's trading? We are just looking for tomorrow's scenario. We are not worried about what will happen later. So please write down 17300 will act as a R1, that is resistance 1 for tomorrow's trading. Okay. So why am I stressing about this resistance level? Because not only my setup, for the market itself that will act as a resistance, not for call option. Market will face some resistance at 17300. What is the next highest after 17300? 17400 is your R2. Please write down. R1 is 17300. Next R2 is 17400, which is R3 17500. Just write down these values. Tomorrow you will get to see the magic. Whenever market is at these levels, you need to be careful. Which are the R1, R2, R3 that we have identified based on the end of the day. You need to check this at the end of the day. Just note down R1, R2, R3. Okay, because there will be some resistance, because market, this open interest will change definitely in the live market, and it can be strengthened or weakened according to change in OI. That's not required, but we need only 3 levels for tomorrow. Market cannot go beyond these 3 levels. Okay, are you clear? R1, R2, R3, how did we identify? The immediate highest is R1, the next highest is R2, and the last highest is R3. We need to have these 3 levels written down every day after market hours. Come to this particular chain and write down R1, R2, R3. Okay. Likewise, if I see which are the levels, which is the immediate highest, don't you think you have 70,000 as the immediate highest compared to these 3 levels? So 17,100 can act as S1 support. If you have highest open interest on the put side, what is that according to our discussion which happened earlier? Too much put writing will create a support, right? So the immediate support is 17,100. S2 is 17,000, right? Then S3 is 16,900. So can you all repeat what is S1, S2, S3? 1700 is acting as S1, and 17,000 is acting as S2, and 16,900 is acting as S3. Don't you think they have created strong supports and resistance for every 100 points gap? See, 300, 400. So don't you think you need to be very careful when market is nearing to the next 100 strike price? Because there will be a lot of option sellers sitting there and they might disrupt your thing. So that's the hint that I'm trying to give you. So are you guys clear how to identify R1, R2, R3 and S1, S2, S3 for next days of next day trading? Okay, so why do we need this support and resistance? Because see, whenever, let us take 17,300 R1, when market is very close to 17,300, say around, let's assume that market is around 17,285. Don't you think it is just 15 points below the resistance mentioned here? Let us assume market opens at 17,285 tomorrow. Don't you think it is just 15 points gap between the resistance and the open price of tomorrow? Don't you think 17,300 will act as a resistance? Yes. So at that scenario, even if my setup is trying to tell you to go for a buy trade, you will not go for a buy trade because there is a resistance which is created here, and they have spent nearly 500 crores to create resistance here. Can I break this resistance using only 20,000 trading capital? Can I break 500 crores worth resistance using 20,000 capital? No, right? So whenever your entry is very close to this resistance which you have noted down one day before, please do not trade. My setup will not work if you take trades very close to the support and resistance of option chain that is decided by big players. Okay, once 17,300 is broken, then you can go for a buy trade, provided my setup is trying to tell you that market is still bullish. Is this point clear? R1, R2, R3, S1, S2, S3, these are the danger mark on the charts. Okay, my setup will not work very close to these levels. You have to wait for the resistance of 17,300 to be broken. Then once again look at the setup. If everything is matching, then take a trade. You have 100 points gap. Next resistance is 17,400. You have 100 points gap and you will get 10 points or more than 10 points targets getting achieved. Likewise, if market opens very close to the support, that is 17,100. As of now, it is 17,154, 50 points above the support. if it is like 17,110, 10 points just above the support, will you take a put option? If you get an entry according to my setup with all indicators matching very close to the support, please do not trade. Let 17,100 to be broken. Once it's breached, you can take a trade. Is this point clear? If you get an entry very close to the support, which is mentioned in the option chain and which you have noted down one day before, okay, please do not take trade. Have some patience. Let it breach 17,100. Then the next support is at 17,000. Pareshji, candle should close below 17,100. Then only it is considered as breached. Okay. We are not, whenever it comes to support and resistance, candle should close below 17,100. Then only we consider that support to be broken. Yes, we look at spot chart and we buy options at market price. How to know if 17,300 is broken? If 15 minutes candle is closing above 17,300, then 17,300 resistance is considered to be broken. Yes, we are talking only in terms of 15 minutes candle. Once you master the setup with 100 days of trading, then only you can shift to any of your time frames. How do we know? Not only this support and resistance, any support and resistance, it requires candle closure. Above resistance to consider it to be broken, below support to consider that support to be broken. Is that clear? Tomorrow, if candle is closing below 17,100, then only you are taking a put option because that support is breached. And if market becomes bullish, if 15 minutes candle is closing above 17,300, then only it's bullish. That's why you need to know these values. These are the specific values which will help you to identify those areas you're not supposed to trade. These are the danger marks. Only if candles are closing above and below these danger marks, then only you are trading. Is that clear? Because my setup will not work. When you take a buy trade below resistance, if you buy call option below resistance, that will fail. You will make loss. And if you buy above support, you will lose that case also. We need to wait for the candles to close above or below these important levels. Is that clear? So every night, please note down R1, R2, R3. You just try to note down which is the immediate highest. Compared to these three values, this is highest. So this will be your R1. The next highest is this. This is your R2. Next is this R3. If candle is closing above R1, that is 17,300, then only take a buy trade. And if candle is closing above 17,400, then only you can take a buy trade. And if candle is closing above 17,500, then only you can take a buy trade. Okay. Likewise, candle should close below this 17,100 for you to take a put option. Candle should close below 17,000, then only will take put option, or else there is high chance of reversal, and most of the people they lose money here. So we need to take the present expiry. We cannot take monthly or the next expiry. The present expiry is 16. That's how I've maintained the present expiry here. There are so many expiries, but we always trade at the present expiry contract. So only we are taking this method. Is that clear? Along with Fibonacci, don't you think you have got another levels which you need to look for? Jaspreet, you are not looking at option chain in the live market. Did I tell you to check these values in the live market or one day before? It's like doing investing.com homework. Note down R1, R2, R3. When market is very close to these levels, don't trade. Wait for candle to close above or below, then you will trade. Yes, it will change in the market, but we are not worrying about that change. I will not take trades when market is very close to this level. Option chain is only trying to tell you when not to trade. Once that is broken, you are free to trade. Is that clear? This is all you need to use my setup. There are so many things like change in OI and all that is very much required whenever you are planning to take a hedge form of trading. But in my setup, this is what you need from option chain. You can write down R1, R2, R3. Definitely this will change. Yes. Anjanji, that's what I'm requesting you. I'll teach you how to choose strike price later. Once 17,300 is broken, I'll buy 17,200. Do you know how did I come to 17,200? In the money, simple, right? But others, they don't know how did I arrive at 17,200. That's what I'll teach later. But are you clear how to use option chain in my setup? Yes, Namrataji, you're right. See, learn what is required to make money, right? You can do PhD on option chain. It is so vast, and there are people, they I've seen they've done a lot of research on option chain, but still they're not able to make money. Doing too much analysis will lead to paralysis. Okay, learn what is required to make money, and be very confident about your analysis. Don't worry what hundreds of people are doing. Okay, if many people do a lot of research on option chain, let them do 24 lakhs in 1 month. Then they waste a lot of time in doing analysis. What is required for making money? Please learn only that and stick to it for the same setup for 100 days, so that that will generate a beautiful thinking. Whenever you look at the chart should start speaking at you. Okay. Yes, Purnimaji, it comes with practice. You need to follow the roadmap which I'll give you at the end of the module. Is that clear? You need to wait. So I'm trying to teach you everything at a slower pace so that you're able to understand things. Correct? So are you guys clear how to use option chain levels with my setup? From Fibonacci, we get PDH and PDL. Okay. And the topmost resistance and the bottommost support. Right. Along with that, you just write down these values. When market is very close to this value, be very careful not to trade. Let candle 15 minutes candle close above resistance, then only you take a trade. Let 15 minutes candle close below support, then only you take a put option. Until that time, please refrain from trading. It's like not trading between 60 and 40. Today it might have tested your patience. First 2 to 3 hours, RSI was between 60 and 40. After that, it was a free fall. Right. Say for example, if I happen to draw Fibonacci on the previous day, right? So this candle breached. So Prashantji, you're saying what to do if we are already in trade and market is near R1. That's what I'm saying. Don't enter trade until R1 is broken. Don't even enter any trade when it is very near to the support. Okay. At least if there is a gap of 50 points between your entry and the resistance or support, by then you would have got your target achieved. But don't take entry if there is a gap of just 15 points or 10 points very near to the support or resistance. So after breaching PDL, was there a fall? After breaching PDL in Bank Nifty, was there a fall of 295 points? But after breaching bottommost support of Fibonacci, there was a movement of double of what happened after breaching the PDL. That's why I would suggest you guys to keep an eye on these two levels. Right here you got 300 points and here you got 600 points. So that is the beauty of it, Fibonacci. If you apply the same logic for Nifty 50, so the same thing will work. So as of now, I've dedicated today's discussion on option chain. Tomorrow I'll teach you how to choose the strike price. Okay. I just want you guys to monitor how will R1, R2, R3, S1, S2, S3 will work tomorrow. Don't worry about change in OI. Just see how beautifully R1, R2, R3, S1, S2, S3 will be respected tomorrow. You will be amazed. Okay. Is that clear? So tomorrow I'll teach you how to choose the correct strike price to trade, and then I'll teach you how to trail stop loss. Okay. So we'll catch up tomorrow, same time, 7 to 8. Okay. And we'll discuss in depth. So please do watch about the R1, R2, R3 and S1, S2, S3. Beyond that, you don't require any more information from option chain. Honestly, that you'll learn tomorrow. Patience is the key. Good night. Take care. So let's learn slowly and gradually and absorb information gradually. Thank you so much.